करूं? Sir, should I start? Good evening, ladies and gentlemen. At the outset, Oil India Ltd is pleased to extend a very warm and wholehearted welcome to all the analysts and investors present on this occasion. We are happy to mention that today we have with us the board of directors of the company, represented by its chairman and managing director, Mr. Sushil Chandra Mishra, Director Finance, Mr. Harish Madhav, Director Operation, Mr. Pankaj Kumar Goswami, Director E&D, Dr. Manas Kumar Sharma. We are also pleased to have with us Managing Director of Numaligarh Refinery Limited, Mr. Bhaskar Jyoti Phukan. We also have our Resident Chief Executive, Director HR Select, ED Finance, and other senior officials of the company present on this occasion. I wish to make special mention of IIFL Securities, who consented to volunteer this event for the company. Dear ladies and gentlemen, Oil India Limited values its investors and analysts meet as an important event in its annual calendar. However, due to COVID-19 pandemic, the company could not organize this event for the last 2 years. Today, we are indeed very fortunate to have so many of you with us. And we convey our heartfelt appreciations for the confidence you have reposed in the company and your continued support to the company. With this, I now request Sri Harsh Dole of IIFL Securities for the welcome address to the House. Thank you.
Greetings. I'm Harsh Dole, Energy Analyst at IIFL. On behalf of IIFL Securities, I welcome you all for the annual Analysts Meet of Oil India. It's my privilege to host this meeting in person after almost 2.5 years. Welcome, everyone. To share OIL's performance and present its strategy for growth, we have the entire senior management team of Oil India. Briefly, I'd like to introduce. We have CMD Shri Sushil Chandra Mishra. He is electronics engineer and an MBA and has worked with Oil India for almost 37 years. He has handled diverse functions like ERP, strategic planning, complex E&P projects, renewable energy portfolio, amongst others. Under his leadership, OIL is bracing to significantly step up the oil and gas production in coming years. We also have Shri Harish Madhav, Director Finance and HR, Shri Pankaj Kumar Goswami, Director Operations, Dr. Manas Kumar Sharma, Director E&D, Shri Bhaskar Jyoti Phukan, MD NRL. All the directors on the dais have more than 30 years of rich and varied experience. I have no doubt in my mind that OIL is in good hands to chart its future growth. During the discussion and the presentation, I'm sure the dignitaries will be able to address all your macro as well as micro concerns on the sector, company, etc. Without much of a delay, I'd hand over the floor to the management for the presentation. Thank you.
Thank you, Mr. Dole. I now request CMD Oil, Mr. Sushil Chandra Mishra, sir, to kindly give his opening remarks.
Good evening, ladies and gentlemen. It is my privilege to welcome all the analysts and investors to this meeting. And seeing the gathering it gives us a lot of confidence that our investors, our analysts are with the company. Most of you are aware about the company, our areas of operations, the policy environment relating to upstream oil sector in the country, etc. However, just to refresh, I would like to give a brief introduction of Oil India Ltd. The company was formed in 1959 as a joint venture company between Burma Oil Company and Government of India. We are in existence for over 6 decades now. We became the central public sector undertaking in 1981, and currently Government of India owns more than 56% of its shares. Now, I'll touch upon the current operations and future prospects of the company. As you are aware, till mid-90s, our operations were concentrated in Northeast India and little bit in Rajasthan. With introduction of NELP, we started our E&P activities in other parts of the country, as well as in the later part of 90s. And in the beginning of 2000, when OALP round came, OALP and DSF, Oil India aggressively submitted its bid and won many blocks. Today, we are operating 66 E&P blocks, out of which 28 are nomination blocks, 6 NELP, 27 OALP blocks, which were acquired in last 2 to 3 years only, 2 pre-NELP blocks and 3 DSF blocks. These are spread in different geographies of India. We have also started overseas venture in 2006-07, and today we have our presence in Gabon, Russia, Mozambique, Venezuela, Bangladesh, etc. Our current production of crude oil and natural gas, it comes mostly from our oil fields in Northeast India, that is in nomination block, and majority of natural gas partly comes from Rajasthan, about 10% of our total production, and the remaining 90% comes from Northeast only, Assam and Arunachal Pradesh. In spite of the fact that most of our fields are very old and matured, we have been able to maintain production through highly successful implementation of IOR, EOR techniques. The company has achieved highest ever natural gas production of 3,045 MMSCM in 21-22. That is an increase of more than 15% over the previous year. We have plans under execution for quantum increase in our oil and gas production. We also have a 1,157 kilometer crude oil trunk pipeline for supplying ours and ONGC's crude oil to 4 refineries in the northeast, as well as transportation of imported crude for IOCL from Barauni to Bongaigaon. We also own a 660 kilometer product pipeline for transportation of finished white oils produced by Numaligarh refinery to their Siliguri marketing terminal. The pipeline capacity is being augmented to cater to the future higher capacity of NRL, which is planned by them. Oil has recently declared its best ever financial results, both at standalone and consolidated basis. Due to our presence in the northeast part of India, which is logistically a highly difficult area, we have developed complete in-house expertise in E&P value chain. This has now become one of our key strengths. We have become the first company in the country to commission a pilot plant of 100 kilowatt capacity for production of green hydrogen in the state of Assam. The plant is based on AEM technology for production of green hydrogen of 99.999% purity. Oil has also entered into collaboration with startups for development of green hydrogen utilities. The company is currently drilling its deepest onshore well in Sadia, in Assam, which will be about 6,500 meters deep. The company has completed committed seismic acquisition in 17 of the OALP blocks. The company is using advanced exploration technologies, including airborne gravity gradiometry and gravity magnetic survey, as well as passive seismic tomography for seismic data acquisition. The company has prepared a strategic plan 2030 with primary focus on use of advanced techniques to improve existing productivity, pursuing exploration and production efforts, inorganic growth, forward integration, and non-conventional energy sources. Our company is led by a very experienced management team, with each director having over 30 years experience in oil and gas sector. We have best of both the worlds with independent and autonomous management and the benefit of Government of India linkages, which add to our capabilities of engaging with overseas counterparts, which helps us with government-to-government linkages in oil and gas industry. With this, I would like to request my colleagues to take forward today's presentation and discussion. I once again thank you all for joining us today.
Thank you, CMD sir, for sharing the valuable insights about the company. I now request Mr. Debajit Hazarika, our DGM Finance, to give the presentation to the House. Thank you.
Thank you, Trishanku. Dear analysts and investors, respected dignitaries on the dais, a warm welcome and a very good evening to all of you. Indeed, we are really grateful to see such a large gathering today. And as CMD sir has said, it really boosts up our confidence. I am starting this presentation. In the session, we are covering an overview of the company, the strategic strengths of oil, its assets and overview, operating and financial performance of the company, oil's growth strategy, as well as the key highlights on ESG. As you know, oil was incorporated in 1959, and it's almost 6 decades that the company is in the oil and gas sector. We have very strong parentage with Government of India. The company got nationalized in 1981, and then subsequently with its consistent performance, we could achieve Navaratna status in 2010. Currently, Government of India is having 56.66% shareholding in the company. We are an integrated and a fully serviced oil and gas company. We have a presence in the entire oil and gas value chain, and as the presentation will go, you will see that we have got presence in refining. In addition to E&P, we have got presence in refining, in transportation, crude oil transportation, natural gas transportation, in petrochemicals, in renewables. So we are a truly integrated oil and gas company. We have, over the period, developed very sound infrastructure as well as in-house expertise to carry out any E&P activity. Oil uses its in-house infrastructure and expertise for all the E&P activities, and as per the business requirement, we also outsource. We have a crude pipeline which is 1157 kilometers long. It starts from Digboi in Assam to Barauni in Bihar. We also have one product pipeline which is basically used for transportation of the product of Numaligarh refinery. It's owned and operated by oil, and the pipeline is from Numaligarh refinery to Siliguri terminal. On the acreage front, we have domestic 66 blocks with around 64,000 square kilometer, and on the international front, we have presence in 7 countries in 10 assets, around 44,000 square kilometer of acreage. We have a strong reserve base. Our 1P reserve for crude oil covers around 10 years of our production, if we consider the current trend, and our 1P reserve of natural gas covers around more than 25 years of our production at the current trend. We are consistently, through innovative technologies, are maintaining a reserve replacement ratio of more than 1. At the group level, our financials, the revenue part is for financial year 21-22, rupees 30,000 crores. Profit after tax for financial year 21-22, 6,719 crore, and an equity base of 26,361 crore. A brief introduction of the management team. We are led by our Chairman and Managing Director, Sir, Sri Sushil Chandra Mishra, with a 37 years plus experience in the industry. Sri Harish Madhav, Director of Finance. Sri Pankaj Kumar Goswami, Director Operations. Dr. Manas Kumar Sharma, Director Exploration and Development. All are having 30 years plus experience in the industry. In Oil's board, the present government nominee director is Sri Ashish Joshi. He is an IAS of 2006 batch and is a widely experienced official holding different posts in government departments. We have got 6 independent directors, Dr. Tango Tapak, Sri Gagan Zain, Sri Anil Kaushal, Ma'am Pooja Suri, Sri Raju Ravanekar, and Sri Samik Bhattacharya. All are eminent personalities in different fields of life, having a wide range of experience and contributing towards the management of the company by participating in all the board meetings and also as board committees, members of the board committees. A glimpse on the shareholding structure of the company. We are listed in both NSE and BSE. Number of shares is 108.44 crores. Our EPS for last financial year 21-22 is rupees 35.85 per share. We have in last fiscal already paid an interim dividend of 9.25 per share, and board in its last meeting has recommended in fact a final dividend of rupees 5 per share for approval of the shareholders. The market cap of the company, considering the share price on 27th of May, is 23,635 crores. Shareholding percentage for the company, Government of India is 56.66%. Domestic institutional investors, including LIC, is 15.96%. FII is 12.14%. Corporate bodies, 10.07%, and others, 5.16%. A snapshot of the company's journey since its incorporation. As I was mentioning, oil was formed in 1959, was nationalized in 1981. We participated in the NELP Round 1 bidding in 1999. In 2009, we went for the maiden IPO of the organization, which was a resounding success. In 2010, we got the Navratna status. In 2012, we entered the renewable domain. In fact, oil, as on date, have 188 megawatt of wind and solar energy. Also, in last year, we have set up the first of its kind green hydrogen plant in the country. In 2013, we took our maiden international credit rating from Moody's and Fitch. We went for raising offshore fund for procurement of our stake in Rovuma block in Mozambique, a prolific gas reserve, and at a very competitive price we could complete the bond raising. We acquired in 2016 two prolific oil and gas fields in Russia, TYNZD and JSC Vankorneft. This was through a consortium of oil, IOCL, and BPRL, the wholly owned subsidiary of Bharat Petroleum. We also participated aggressively in all the bids of OLP, DSF, as well as city gas distribution in 2018. We have, as we'll be showing in the slides, around 27 blocks of almost 50,000 square kilometer of acreage under the OLP bidding rounds. Financial year 21 was a significant development for oil as we acquired the majority stake in Numaligarh refinery. We were already having 26% stake in the refinery, and with a consortium of EIL and Government of Assam, we acquired our stake was 69.63, current stake in Numaligarh refinery. And with this acquisition, we have become a truly integrated E&P and downstream with a major presence in downstream industry as well. In financial year 21-22, as I was mentioning, we have also set up the first green hydrogen plant of the country. This was using an AEM technology and with a hydrogen purity of 99.999, 5 nines. So currently we have got a tie-up with IIT Guwahati to explore the further scope in this regard. A view on the company's current credit ratings. We have got investment grade ratings from international agency Moody's and Fitch. Moody's, our rating is Baa3 with a stable outlook. Fitch is BBB negative. On the domestic front, we have got ratings from CRISIL as well as CARE. Both the organization has given us the highest rating for our long-term instruments, AAA, and for the short-term instruments, A1+. CRISIL rating, the maiden rating was in last year, in 21-22 financial year. Just to again highlight few of the key performance of the company for financial year 21-22, as we were mentioning that we had the highest turnover and the highest profit after tax in financial year 21-22. Our major subsidiary, Numaligarh Refinery, also reported the highest profit after tax during financial year 21-22. On the physical front, our crude production also increased by around 1.5%, and gas production increased by around 15%. We achieved a gas production of 3045 MMSCM in financial year 21-22. As I was mentioning, we're the first company in the country to commission a pilot plant of 100 kW capacity based on anion exchange membrane technology for production of green hydrogen of 99.99% purity in the state of Assam. We got the maiden rating, a highest rating from CRISIL last year. And we are also proud to say that we have got nil comments from government audit for consecutively 19 years, which definitely shows our standards of ethics, transparency, and integrity. A view on the overall group structure of the company. On the overseas front, we have got presence currently in 7 countries, in 10 assets. Out of that, 4 are producing blocks, 4 are exploration blocks, and 2 are developing blocks. We have got 2 assets in Russia which are regularly paying us dividend since its acquisition from 2017. All these acquisitions were through our wholly owned subsidiaries, foreign wholly owned subsidiaries, or step-down JVs or SPVs. On the domestic front, as I was mentioning, we have got presence in the refinery sector through our stake in Numaligarh refinery. We also have 5% stake in IOCL. On the petrochemical side, we have got 10% stake in BCPL, and NRL, as they are also holding 10% stake in BCPL. So as a group, we have got 20% stake in BCPL. For another entity, Assam Petrochemicals Limited, we have got 48.68% stake. This is also in petrochemicals. In gas transportation, we have got stake in Duliajan-Numaligarh pipeline. That is, we have got 23% stake. And we have got Indraprastha Gas Grid Limited. We have got 20% stake. IGGL is formed basically for gas connectivity to all the northeastern state capitals. So, friends, you can see that we have got various experience in and our presence in all these diversified entities. Also, on the CGD part, HOGPL and PBGPL, they have their presence. HOGPL is basically doing CNG stations in Maharashtra as well as in Haryana. PBGPL is for the northeast states. And we have got stake in HOGPL with HPCL, we have got 50% stake. In PBGPL, we have got 26% stake. A snapshot of our stakeholding in all these different entities on the domestic front. As we are mentioning, oil is a truly integrated oil and gas player. On the exploration front, we have got domestic 66 E&P blocks, and on the international side, we have got presence in Russia, Venezuela, Mozambique, Gabon, Libya, Bangladesh, as well as in Nigeria. We have got production, on the production front, we have got crude oil installations, 48 installations and 1670 kilometers of pipelines. For natural gas, we have got 29 installations and 730 kilometers of pipelines. The company has been pioneer in utilizing all state-of-the-art technologies to maintain its matured fields and to ensure a steady production. We have been consistently producing 3 million metric ton plus. On the transportation front, we have got the pipeline of 1157 kilometer, which has a capacity of 6 million metric ton. We have the product pipeline, which is 660 kilometer long, 1.70 million metric ton capacity. This is also undergoing revamping to cater to the needs of Numaligarh refinery, as the refinery is going through a major expansion plan. On the natural gas front, we have got 23% stake in DNPL in Northeast, which is having a 192 kilometer pipeline, 20% stake in IGGL. On the downstream side, 69.60% in NRL. We have got 10% stake in BCPL, 48.68% stake in APL, and city gas distribution, 4 geographical areas. On the non-conventional energy part, we have got wind energy, we have got presence in solar energy, as well as in green hydrogen. Oil over the years of its presence in the ONG industry has developed in-house expertise and is capable of carrying out any E&P activity through its in-house resources as well as in-house expertise. We have got resources and expertise to complete seismic, drilling, logging, field development, production, field reservoir management, IOR, EOR. In the entire gamut of the E&P business, we have our own resources, internal resources, to complete the activities. We have got production and storage facilities also, which are commensurate with the current production that we are having. On the technology journey, as you can see from the graph, we are maintaining consistently 3 million metric ton plus production through adoption of advanced technologies. All our fields, most of the fields are mature fields. Of course, we have been able to replenish whatever we are producing from these fields. We have been using technologies for intensive exploration as well as for enhanced production. Technologies like alpha dominant frequency processing, cable-less seismic data acquisition, passive seismic tomography, again for enhanced production, extended reach drilling, hydrofracturing, chemical water shutoff. All these are state-of-the-art technologies which the company is using to sustain its production, maintain its reserve replacement ratio. A few slides on Numaligarh Refinery, our material subsidiary. We acquired Numaligarh Refinery stake in 2021. Numaligarh Refinery is a state-of-the-art refinery in the state of Assam with current capacity of 3 million metric ton. It has a high complexity, Nelson Complexity Index of 9.2, which enables it to produce diverse products. It has a very consistently high distillate yield and high refinery margins. The refineries have two marketing terminals. One is at Numaligarh as well as one at Siliguri, which is connected to the product pipeline owned by oil. Refinery has credit rating from CRISIL, AAA and stable A, the highest rating. Currently, the refinery is going through a major expansion of increasing its capacity from 3 million metric ton to 9 million metric ton. To cater to the additional 6 million metric ton, there is a parallel project going on of laying a pipeline from Odisha to Assam for connectivity. Numaligarh Refinery is already currently selling products to Bangladesh and is also in a project of creating product pipeline from India to Bangladesh. Refinery is having another project of biorefinery for production of 2G ethanol, which is in advanced stage. A glimpse of the physical performance of the refinery. On the financial side, as I was mentioning, the profit after tax for the refinery for last year was the highest as reported by Numaligarh Refinery. The EBITDA margin percentage was around 22%. The refinery gross refinery margin is around $14 per barrel. Details on oil's domestic acreage. We have got 66 blocks with an acreage of 64,000 plus square kilometer. We are operator in almost 59,000 square kilometer of all these blocks. And you can see that under OLP bid, we have got 27 blocks with almost 50,000 square kilometer of acreage. So it shows the way aggressively we are going for bidding in the OLP blocks. A glimpse of the presence of the different blocks across the country. The green blocks are basically for the OLP round blocks that we have got. And you can see that all throughout the country we have got our presence. A glimpse on the overseas assets presence for oil. We have got producing assets in Russia, 3 fields, the JSA Vankorneft, TYNZD, and License 61, and also a stake in Venezuela, that's also a producing field. We have got development assets in Africa. We have got exploratory assets in Africa, and 2 blocks we in partnership with OVL we are doing in Bangladesh. Few details on the Russian assets which are paying dividend to us from 2017. We acquired TYNZD, 29.9% stake with IOCL and BPRL. The total acquisition cost was 1.1 billion and oil share was 392 million. Against this, you can see that we have already received our share of dividend to the tune of around $272 million. The field is located in eastern Siberia, in Russia. Oil share of 2P reserve is around 10 million metric ton, and the current production level is around 1 lakh BOPD. We have got another huge asset, a very prolific asset in the JSA Vankorneft, Russia. This is also in eastern Siberia. The acquisition cost was 1.8 billion with oil share 598 million. We have received cumulative dividend of 391 million from this field. Oil share of 2P reserve is around 13 million metric ton. We have got under stake in Area 1 Rovuma, Mozambique. It's one of the largest gas reserve. Our acquisition cost was almost $1 billion. The project has completed FID in June 2019, and project financing, the wet closure was achieved in March 2021. However, currently the project is under force majeure for security concerns. Other Indian entities which are having stake in this project are BPRL as well as OVL. You can see that oil has a consistently performing for crude oil production. There is a marginal increase of around 1.5% if we compare 21 to 22. On the gas front, we produced 3045 million SCM of gas, which is around 15% increase over last year. Our reserve base, as I was explaining, it's with the crude oil reserve of 1P reserve of almost 10 years equivalent production and natural gas reserve of around 25 years production. On the 2P reserve basis, our percentage of gas reserve is around 63%, and for crude oil it is around 37%. And the reserve replacement ratio is consistently more than 1. For financial year 21-22, it is 1.11. Price realization last year was very good. For crude oil, the average price realization was almost $79 per barrel, and net realization after the statutory levies is around $53 per barrel. For natural gas, as you will be aware that there was a good price hike, and for the period April 22 to September 22, the current price is $6.1 USD per MMBTU. Financial performance of the company, we got a revenue of 16,428 crores last year. The EBITDA margin percentage increased from 30% to around 44%. We reported the highest PAT of 3,887 crores. EPS for last year was 35.85 rupees per share. Our net worth increased from 24,500 crores to 26,979 crores. We paid a handsome dividend last year. Government of India's share was around 670 crores, and for other shareholders it's around 876. Sorry, 876 for Government of India and 670 for the other shareholders. And the dividend payout ratio is around 40%, which we are almost consistently maintaining. Book value per share for last year is 275.64 rupees per share. Oil's debt as on 31st March 2022 is 11,636 crore with a debt equity ratio of around 43%. At the group level, our debt stood at 16,388 crore as on 31st March 2022. Contribution to Central Exchequer, we contribute through income tax payment, through cess payment, through dividend payment to Central Exchequer, and for the State Exchequer through royalty payment and VAT payment. On the CapEx front for the company's growth strategy, we incur around 4,300 crores average as CapEx per year, and we spend around 55% of the total CapEx for core E&P activities, seismic, exploratory drilling, development drilling. Our actual expenditure reported for 21-22 is 4,277 crore, and for 22-23, the plan is 4,302 crore. Just to share with you the short-term growth perspective of the company, we are on Mission 4+. We want to increase our production from the 3 MMT level to 4 MMT level. With this target, we have prepared enhanced production profile for all the oil and gas producing fields under nomination regime. This was vetted by one of the renowned international agency, DNM. 5 thrust areas were identified, 3 in Assam, 1 in Arunachal Pradesh, and 1 in Rajasthan. The target is to do 75 wells to be drilled over a period of 4 years, and it is expected that this will contribute around 30% additional production from these thrust areas. During 21-22, we have drilled 8 numbers of wells, and the additional production achieved is 1612 KL per day against the target of 1126 KL per day. We have a long-term strategy. This was adopted in 2016, Mission 2030, where we have an ambitious target of increasing our production, both domestic and overseas, to 15 mmTOE. And we want to increase our production from outside Northeast as well as overseas by more than 50% of this total production. We also want to be recognized as a renowned player in managing matured assets. Currently, different steps are being taken so that we are on track for Mission 2030. Some of the strategies to achieve these 2030 aspirations: reimagined main producing area development to maximum potential, state-of exploration and development activities in select Indian basins, build international presence at scale in 1 or 2 geographic clusters, pursuing selective profitable diversification in the energy value chain, restructured organization and people processes to deliver the perspective plan. We are taking all initiatives to have a sustained ESG compliance in the field of carbon transition, in the field of physical climate risks, water management, pollution and waste management, natural capital. The company's management is taking all required steps so that we are ESG compliant. Both international rating agencies, Moody's and Fitch, have kept us at par or in a better position on the ESG scores with our most of the peer entities. Oil is known for its CSR initiatives. In fact, we have got a lot of awards and accolades from all the fronts for our CSR initiatives. We are called the People's Organization. Some of the flagship projects which the organization has taken during the years are like Oil Sparsh, Swavalamban, Super 30, Rupantar. So all these are to cater to the needs of the extended family members of the corporate. Oil has taken good initiative in management of COVID. A 100-bedded COVID care center was set up at Duliajan, where is the operational headquarters is there. We supplied oxygen plants in different states, 5 in Bihar, 2 in UP, 1 in Nagaland, 1 in Arunachal Pradesh. We have supplied oxygen cylinders to different parts of the country. We have taken extensive measures to ensure that complete vaccination is done for all the employees, their dependents, the business partners, including the contract workers, channel partners, and nearby community. Friends, to summarize, Oil India is having a steady and sustained growth with a sound financial health and a strong operating track record. With its 6 decades of presence in E&P expertise, is spreading its wings in Northeast, Pan-India, and global. We have got large prospective E&P acreages. We are pioneer in pipeline transportation. We have acquisition of discovered and producing assets, and we are diversifying into new areas but remaining focused on our core area of E&P. To share with you, we have got dedicated officials to cater to the needs of the institutional investors as well as retail investors. Thank you very much.
Thank you, Deposit, for such a beautiful presentation on the company's past, present, and future. So now the house is open for question and answer session.
Substantially below fair value is that the execution track record in terms of very large projects has been, has not been as well as one would have hoped for. Like in the case of NMDC, their steel plant has taken several years beyond what was initially planned. So this expansion from 3 million to 9 million, we've already seen the planned project capex being revised more than once on the upside. So if you could guide us with some realistic timelines in terms of when this project can actually be commissioned. Thank you.
Thank you. I'll request Sri Bhaskar Jyoti Phukan to address to the issue, the two questions.
Yeah. On the first, the margin, the GRM, you have seen that generally we are a typically $7 per barrel refinery, if you see the track record, because our distillate yield is extremely high. It is best among the all oil PSUs. We convert 0.86 ton of product from 1 ton of crude process. That is the kind of distillate that we have. If you see the rest, they are at around 79 to 78%. So therefore, our margins are generally good, and last year was exceptionally good because of the Ukraine war and then spread between diesel and, because we are mostly a diesel refinery as of now. We have a hydrocracker. We maximize the diesel production. So that being the case, the first 2 months of the current financial year was even better. You know that diesel spread was hovering around $47 in the month of March. It has marginally come down now. It is in mid-30s now. So therefore, our margin this year are also going to be very high if the things remain the way it is today. That is the first part of the question. We also get excise benefit on top of that. I am not, these figures are excluding the excise benefit. Yeah. If you top it up, it will be much more. Second, your concern about the execution of the project. See, from my knowledge and the kind of dedicated team that we have, on their behalf, I am committing that this project is not going to be the way normally the government sector projects are doing. Because it was our dream project. We are pursuing this project from the year 2011, but it got approved in 2019. So enough planning and pre-planning has been done. And we are working day and night to see. But we were not helped by the 2 rounds of COVID that we had. And the cycle of commodity price increase that is actually affecting the prices like steel, which is predominantly used in the construction of the refinery. So those are the facts that you have to bear in mind. As far as revision of CapEx is concerned, see, as I had mentioned, because we had started the refinery configuration in the year 2011, had we pursued the same refinery configuration, we would have stayed with the same prices that we were approved, that is 22594. But we thought that it is not prudent to have a refinery which was envisioned in the year 2011 to be executed in 2024. Definitely things have changed drastically as far as auto fuel demand is concerned. We need to build flexibility for future. So that is why we have brought in a lot of other plans within the configuration so that we can be flexible in our product portfolio. Typically, we have gone the petrochemical side. Therefore, we have inducted plans which were not part of the original configuration. So there was a scope change in between. That is why we went back to the ministry, and with their approval, now we are at 28,026. But I am assuring you it will be a very smart refinery with lot of flexibility. If the auto fuel demands were to go down in future because of the very aggressive intervention of EVs, we will still survive.
And on the excise duty benefit, it was reduced to the current level some years back. So is there any risk that this excise duty benefit may be reduced further at any stage ahead of the sunset clause?
One thing, there is no sunset clause.
Okay.
Fortunately, but it is the government to decide, and I would not be able to comment on what government will decide on the excise duty.
Because
but
depending upon the scenario, they may take some decision. It may go on increase also.
But statistically, if you see the prices go down, generally they mop up with additional revenue, and that actually helps us.
Right. So on this 28,000 crore capex, what is the timeline in terms of spending this? Is it 3 years?
25.
We should
24, 25.
It was a 48 months target. So
Okay.
we should be up and running by end of 24.
And how much have you already spent?
We have spent, we have committed around 16,000 crore already.
Okay.
But spending, I think, around 4,000 crore we have already spent.
Okay, fine. My next question is on the overseas exploration blocks. So in the recent ONGC analyst meet which they had, there was a mention that out of the 3 blocks which they have in Russia, one of them is facing some logistical issues. So what I would like to understand from you in terms of our 3 blocks, are they all functioning as per plan so far, or there is any disruption? Number 1. Number 2, in terms of the dividend flows, I believe it's quarterly. So how are we planning to get the July dividends? Or is there any revisiting of the methodology of getting those dividends?
Actually, as far as these Russian blocks are there, we have not come across any such issue. The crude oil and gas, they are in sale, normal sale. There is no problem as such. As far as dividend is concerned, it is, I understand it is declared 6 monthly.
Okay.
So January, February it came. Now it should come in July, August. So far we have not thought of any alternate method. We are hopeful that things will be settled down by that time.
So
Please give chance to others also.
sure,
Yeah?
I'll come back after this.
We have a request to the audience. So whoever has any question, kindly mention your name and organization's name.
Yeah, my name is Vipul Shah. I am an individual investor. So, can you quantify the exact excise benefit now for the NRL?
It is in the order of around 3.5 thousand crore, like that.
3,500 crores.
Annually,
Annually.
irrespective of the quantity?
No, it is a specific.
It is specific to 21-22.
Okay.
So as the
So
rates
what-
vary, it will vary. But fortunately, excise duty is on specific. It is not ad valorem, so it doesn't vary with the
So,
prices.
what will be the benefit once you reach your full capacity of 9 million metric tons?
No, it should be in excess of 10,000 crore. But we are trying to become independent of excise duty because the kind of value additions that we are envisioning, so we will gradually become independent of this benefit.
And, sir, would you repeat the capex already done? You said 4,000 crore.
4,000 crore money
yeah.
has gone out, but our commitment to the market is in excess of 16,000 crore.
crores.
So what will be your peak debt for this project?
We have tied up debt of around 18,900 crore, but we may not require to draw that much. So we have flexibility, and if the revenues are as buoyant as we have seen this year, so we might end up drawing a little lesser than that.
So what was your standalone debt as of 22 March?
Analyst didn't have any standalone debt prior to this expansion plan. And for this expansion plan, only some drawdown has been made.
And some drawdown, around 900 crore we have drawn last financial year.
But since it's a huge capex, you will need to draw more. So my question is, what will be your peak debt?
Yeah, peak debt is 18,900 crore. Oh. After that, the repayment will start.
And last question, can you give your product slate? I mean, you said you are heavy on diesel side, so if you can give
we are almost around 69% of diesel as of now, but we have little flexibility over there. Almost 15% additional is MS. Rest it is flexible. We can produce ATF to the requirement, because Kero we have brought down to 0. So we have pet coke, and which is also anode grade. So these are the things that we produce.
I have more questions, but I'll come in the queue. Thank you.
Then you can come back to him. He had some more questions.
Yeah. So what I would like to understand is, in terms of the next revision on the gas prices, which is due in October, there is, given the inflationary trends, there's a lot of, uncertainty about whether the kind of increase which is warranted will happen. So do you have any comment on that? Number one. And number two, on the, the speculation around the windfall tax. Whether you think this is something which is even in the realm of possibility, or we can safely assume that it's speculative?
Yeah, as far as this windfall tax is there has been some rumor here and there, but there is no communication on that. There is no discussion going on as far as our knowledge goes. So let us not speculate. If something comes, we'll see on that. On same thing on gas price, it is going to increase from October session also. But if you see the international gas price and all, it is still, I feel it is much competitive in India. So we feel that this free marketing freedom will remain, and they will give the increase whenever it comes.
Okay, and one last question. You have mentioned in your presentation that 30% increase in production should come from the, the new wells which you are planning to dig. What I would like to understand is, from your existing reserves, what kind of ramp up is possible, A, and B, you've given a long-term vision over 15 years that you want to increase it to 15. But if you could give us a more shorter-term vision, like 3 years or 5 years.
That we have already told. In shorter term, 24-25, we are trying to increase the crude oil production from current 3 million to 4. And this is coming from our existing fields only, existing reservoir only accelerated drilling program, because we are adding some reservoir also continuously.
Okay.
So there are 5 fields identified, and all are nomination block, where we are currently producing.
So the new ones are beyond that?
Yeah.
The new ones will come beyond 24-25?
Yeah, new ones, it is OLP and other thing, it takes 5 to 7 years to come to know about their prospectivity.
Right. Thank you.
Thank
that answers my question.
Yeah, Vipul ji, bataiye.
Hello.
So, sir, can you give your exploration and development cost per barrel Means,
Our total production cost,
yeah,
if you see per barrel, is about 34 to 35.
it includes
$.
both exploration and development.
Entire thing, finished product I am talking about.
Okay.
Total.
And sir, lastly on NRL debt, so it will be taken on the books of Oil India or it will be on the books of NRL?
It will be in the book of
That will be on the standalone books of NRL,
NRL.
but when we consolidate NRL into Oil India books.
And what is the coupon rate, sir?
Sorry?
For 18,000 bank credit line which has been approved, what is the coupon rate?
7%.
Sorry?
We started at 7.05, but the recent revision there will be marginal increase there. It is a floating rate.
7% roughly.
Roughly 7%.
Okay. Thank you, sir.
And you talked about the exploration cost, exploration development, that is around $7 to $8 per barrel of oil equivalent.
Only exploration and development.
Hello, good evening to you all. I'm Mrs. Patel over here.
So this side.
Okay.
I would like to ask a question regarding Oil India has come out, it's a plan to have hydrogen-run gases. Hydrogen-run gases along with the blending with natural gas. Sir, could you throw some light on it? It will be operated in Assam. Will it also be operated in cities like Bombay and Delhi in the future? My second question runs as to, we have now Mr. Ranjit Nath as our new chairman. Is he present here at the meeting today? If he can be introduced to us over here, if he is there. These are my two questions, please.
Okay. Thank you, Mrs. Patel. On this mixing of hydrogen with the CNG or natural gas, this is on pilot basis. It is being studied by IIT Guwahati. And in fact, other petroleum companies, they are also having some R&D. As of now, worldwide, 15 to 20% mix is allowed. First, we have to produce the green hydrogen. Once these are increased, there are more plants. Definitely, it is going to be mixed with the CNG as well as the natural gas. And if it is mixed in Assam, it can be mixed in Maharashtra also. There should not be any doubt in that. Regarding Mr. Rath, I don't know whether he is here or not. He will be chairman from 1st of July. So let us see.
Yeah, hi. Thanks for the opportunity. I'm Rohit Rokade as an individual investor. I have a question that currently oil is trading at $120 barrel, but as in when the Russian-Ukraine crisis settled down, we may see the price coming down to maybe $80 barrel. And 1 year down the line, about $60 barrel. So in this situation, will our top line margins be look like a percentage-wise basis in FY23-24? Will it deplete, or we may be see a similar performance? And the second question is, so what will be the potential companies targeting from the DSF round 3? And we are awarded any blocks by when we can expect this field will come into the operation? Any timeline you can give us? And my last question is, oil ministry is planning to boost to domestic crude output. So they have plans to sell PSU dormant oil fields to small private players in the market. If this thing happen, will this move benefit to a company or affect the future plans? That's all from my side. Thank you.
The first DSF block. DSF, we have taken 3 blocks. And this is very, very small blocks. Not a very huge production is expected from these 3 blocks. These are in difficult areas and you have to do a lot of development. The first production is expected only after 1.5 to 2 years. We have got one in Tripura, one in KG offshore. KG offshore things we are trying to expedite because it is offshore. It may take some time, 1 to 1.5 years. And there the production was not very high, and that is why it was given for bidding. Your third question was regarding that.
Oil Ministry is planning to boost the domestic crude oil output. So they have plans to sell PSU dormant oil fields to the small and private players in the market. If this thing happen, will this move benefit the company or affect the future plans?
No. Actually, if you see, this plan has been going on for last 4 or 5 years. And definitely some of the private players, they have come in through either OLP or through DSF or through PSC. But those blocks which were awarded, Oil India awarded one block to one company, but they have not yet come up with any development activities in those. And that is why now we are trying, ONGC and Oil India, we are trying to engage with some of the companies who can come, who can partner with us, share the profit, share the enhanced production, and then we can introduce them in our own field. And first question was regarding this crude oil pricing.
Yes.
I think you wanted to know whether
$80
the crude prices come down from current 100 to 80.
I'll repeat the question, sir. Currently, oil is trading at $120 barrel, but as when the Russian-Ukraine crisis settled down, we may see the price coming down to maybe $80 barrel, and 1 year down the line, about almost $60 barrel. So, in this situation, how will our top line margins be look like on the percentage-wise basis in the FY 23-24? Will it deplete, or we may see a similar performance?
Percentage-wise, there should not be anything.
If it is the prices are coming down from $120 to $60 per barrel scenario, which you are anticipating, so naturally the bottom line, top line, everything margins will come down, because we are not operating on the margins, we are operating purely on the crude pricing, unlike refineries which operate on the refining margins. So naturally there will be some effect on the bottom line as well as on the top line.
So once again, I'm Mrs. Patel. I would like to know that our Bombay High is very rich in natural resources, natural gases. Is Oil India has any plans to join with our Bombay High in the future? If you could throw a light on it.
ONGC is already present there.
You all are mainly in the north. So any plans for the west?
No, actually, ONGC is already operating in Bombay High. So there is no need for oil to go, and that is the nomination block. It is awarded to ONGC. So there is no plan to join hands with them at the moment.
If there is no further question, then I request our resident chief executive, Mr. Prasanta Barkakati, to kindly come forward for a vote of thanks.
Good evening, everyone. I take on the honors responsibility of extending our deep sense of gratitude to all the investors, be it institutional investors, the analysts here, in fact, a few retail investors. I think the huge presence here truly reflects the abiding spirit that these people have to further the growth of the organization. We are extremely overwhelmed. I'd also like to put on record our appreciation to the CMD and the Board of Directors of Oil India, to Mr. Bhaskar Jitifukan, the Numaligarh Refinery Limited, he's the Managing Director. And of course, the IIFL, who has really greatly, largely helped us in organizing this event. With this, thank you once again. Please join us for dinner now. Thank you.